If you have ever been wicked out of a trade before it ended up going your direction, this video is for you. We're going to talk about trend analysis, how to identify the stages of a trend, how to trade them, and how to essentially dodge pullbacks and consolidation so that you can continue to trade with trend and not get wicked out anymore. As I alluded there in the intro, there are three stages that a trend moves in. Of course, there's the trending stage, where it's buying or selling strongly. There's the consolidation stage, where there's a lot of overlap, basically a range. And then there's the pullback stage, where it's counter trend buying or selling that is simply coming back to a key point in order to continue higher. When we learn these stages, learn how to anticipate them, we can keep ourselves in a consistent flow state of knowing when to be risk on, risk off, long, short, or neutral. That ability to form a game plan every day has allowed me to be much more consistent and profitable than how I used to be in the past, which is coming into every day wondering what's gonna happen. No, I come in with an idea that was based off of what the chart is already presenting. If my past self sounds like you, watch this entire video, because the goal here is to share these exact concepts with you so you can leave with a roadmap into going into every single trading day. My favorite chart for doing trend analysis is the hourly chart with after hours turned on. Here is a screenshot of QQQ's hourly chart. The after hours and pre-market are highlighted in gray. And as you can see, that pre-market action and after hours action definitely guides what we end up doing intraday. That is not some big revelation here, but it's just the filter in which we see it through that helps us out a lot. I have always acknowledged pre-market action, but I only ever looked to trade pre-market high or pre-market low. Now that I'm looking at it in the form of trend stages, I'm saying, okay, it looks like in this uptrend, overnight, we already made new highs. So when the next day opens up, I really shouldn't expect to catch more of an uptrend. If anything, I should probably expect consolidation or a pullback. And the reason higher time frames are so important is because they really capture the overall move. And the reason I like the hourly over a daily or a 30-minute chart is because it is the perfect intermediary for what price is doing. The hourly chart is super helpful. And so if you're not already using it for most of your analysis in general, I highly recommend it. All right, so right here, I have a hypothetical trend with our three stages organized by color. So trending, of course, is green in this example, pullback is red, and consolidation will be blue. So let's talk about how they all work together. We obviously see the first leg of the trend, and it establishes this minor pullback here that ends up becoming our higher low. But then we see our next pullback, we see that it's stronger. Are we already thinking that the trend is over? Not yet. Why? Because the pullback came to this previous high and established it as an area to consolidate. So now we're using the stages plus what's huge, context. The context is we're in the uptrend. Yes, we're pulling back, but we still have this high to take out and we're not doing it. So we're holding it. So now the context is telling us all three stages have played out and we're holding now what's a higher low. So that means that we can realistically anticipate, there's no guarantee, but we can realistically anticipate that the next move here is a move up. When you understand these stages in this concept and with the context, this will allow you to come into the day seeing in an uptrend, you're seeing consolidation happen into pre-market, but that consolidation in and of itself is forming a higher low. That tells me, like our example here on the whiteboard, I should be looking to find an early entry to go long because they've already done their consolidating after hours, but they held a much higher low than the previous day. Perfect. that means that all signs point to us attempting the previous day high and beyond. In another example, if we are opening super high on the day in that uptrend, I can realistically expect us to make a pullback before I try and going long. That may mean that I am tradeless for the first 30, 45 minutes of the day up to an hour, but what I'm doing is making me more money than if I would have taken those bad trades. What I'm doing is sitting on my hands and allowing the market to come back to the level it's looking for before it can start going back up. What I'm saving myself is a lot of bad price action trading, headaches, confusion, and all the rest. When I have a clear game plan and I allow the chart to coincide with my game plan, I can then act on it. And I know how much I really should be risking. Having these kind of game plans, let's say if we already done an uptrend and we already did a pullback overnight, should I really be expecting much more action during the day? What if I should be expecting consolidation? Is that a day that I really should be trading a lot? At that point, what's my game plan? It's wait for the next stage. There's nothing to do during consolidation. Let's say if that consolidation isn't coming at a good area. Or better yet, let's say we do open and we consolidate for the first 30, 45 minutes. Are we consolidating at a key level, whether it's one that we've derived from the chart or one that we've derived from the trend? If neither of those are the case, you shouldn't be trading. All right, so here's an example of a trade I took using these exact concepts and stages of the trend. So first, let's start here. It is the MNQ chart. Let's start on the hourly. So I took this trade on July 2nd. And so the context going into it was that we were on the hourly chart. We were uptrending. We'll pull back there. We see we had a very manipulated pullback here to a big spike, and then some ranging in the later stages of that 1st of July into the morning of July 2nd. And here in pre-market, we were dropping right to that 1, 2, 3 triple bottom area that was confirmed when we, with the use of the 9 o'clock candle, I don't want to buy there. When the use of the 9 o'clock candle, we started making our move back up. So this was an early entry for me. I got in right around 9:36, and I was able to hold this trade all the way up as late as about 10:30. So right into this area. Very nice, very clean. But how was I able to do that? Well, we had the pullback stage happen. We had the consolidation stage happen. In an overall uptrend, the price was once again finding buyers and turning around at this 26 or 22,600 area. All right, so that's a clear level that we're reacting to, right? Very straightforward thesis there. I got my entry right in there. I like to use inside bars as a way to enter, and that allowed me to capture a very, very clean uptrend. I like to highlight that counter trend movements are typically very choppy. So we see this is July 1st chart. We know that was a pullback day, right? And also our range day. As we can see, we had the range off the open, a nice drop, but the rest of the day was just a whole bunch of ranging as well. And even this drop was a little bit difficult to catch if you weren't looking for one. If you were, good for you. But you see, a real entry to catch this didn't even manifest itself until 10:30, and that kind of coincides with that the stages that are with trend are not yet present, right? And it was a clean pullback, but you see a lot of little bars here, not a lot of movement. It was pretty slow, and then it manipulated down to spike down that low a day, and then reverse, and then range. So as you can see, like, just the difference between counter trend and with trend movements are very visible and the with trend movements are very nice to trade. I hope those two examples really helped get those ideas through to your guys' heads and understand the different stages of the trends, but not just to understand them, but how to apply them in their different combinations and the different ways that they manifest themselves, and how you're always staying in rhythm with the chart. Here's a quick exercise. Go ahead and take the last 3 trading days, look at those charts, and see how you could have applied trend analysis now that you're looking at it through this lens, and see how it would have impacted your trading. Maybe you would have been able to avoid taking a few small cuts before you caught that big winner. Or maybe you really struggled on a easier with trend day. Maybe you had the idea that we were gonna consolidate or go short. See how you can improve upon your ability to surf the trend. This is how I plan my day every day. I come into the markets, I read the trend, identify the stage, anticipate what's coming next, I wait for my key levels, and then I execute. This is how you stop reacting and start dominating. Think bigger, think ahead, think the chart.